Welcome to Illuminati's Silver. We tell you the truth about silver. Today is Monday the 28th of March 2016, and we are completing yesterday's video when we asked the question, is physical silver a cheap purchase at $15 an ounce, especially as it's fallen from a high of $50 during the past 5 years? In part 1, we suggested that much depends upon your time frame, and alluded to the fact that if it's 10 plus years, then current prices seem very reasonable. And this is supported by the Silver Institute's recent reports on supply and demand, and the likelihood that mine supply in 2016 will be some 5% below demand, and this may very well continue through 2019. Today, we are briefly addressing the issue of economic slowdown, deflation, and negative interest rates. For investors who believe gold will keep climbing on worries about a global economic slowdown, deflation, and negative interest rates, silver could become a more profitable alternative, especially as it has advanced less than gold this year, and typically the metal outperforms when the price of gold is rising, and generally underperforms only when both are falling. However, Jeffrey Christian, Managing Director of CPM Group, is not convinced. He says, quote, "There's a lot of bullishness forming around silver. We are of mixed minds. Silver is in surplus, plain and simple. Investors will only increase their purchases if there are more worrying economic, financial and political developments. CPM Group data on supply and demand show annual surpluses from 34 million ounces to 177 million ounces, stretching back to 2006. Unquote. He infers that worries over the future health of the global economy may also not augur well for a metal known as the poor man's gold, and which derives more than half of its demand from industrial uses. So what does this actually tell us? Well, for one thing, it certainly suggests that the case for buying silver will indeed increase as this decade proceeds. Of course, this could be derailed as the result of a worldwide economic slowdown, which many of our listeners believe will happen. However, if perhaps there is actual economic growth of even a paltry 2% in the West, and 5 to 7% in India and China, and somewhere in between for the rest of the developing world, then perhaps silver demand will continue to exceed supply, and over time cause its price to rise. Now, before you rush out and purchase millions of ounces, we suggest you bear the following in mind. Gold and silver is priced in US dollars. With countries around the world moving to negative interest rates, and the Fed still talking about raising rates, even though there may only be 1 or 2 rises this year of 0.25%, in relative terms, this will strengthen the dollar and continue to have a downward impact on prices. Nevertheless, this will to some degree be balanced by those investors wanting to take their funds from banks and the stock markets and move a proportion into gold and silver. It should not go unnoticed that only last Friday it was reported that the US economy grew at an annualized rate of 1.4% in the fourth quarter of 2015. The US Commerce Department revised its fourth quarter GDP to upward from an initial estimate of 0.7%. Overall, the US economy is estimated to have grown at a rate of 2.4% for the whole of 2015. One reason for the revised figure was greater consumer spending than officials have initially thought, boosted by an improving labour market. This suggests, at least superficially, that the economy may at last be improving, though we are acutely aware that many of our listeners do not believe government statistics. Also, core inflation accelerated for the 4th straight month to 2.3%. reaching its highest since May of 2012, as costs of rent and medical care increased at a faster pace. This could indeed mean that interest rates may be raised. We doubt it will happen in April, but that said, more economists are beginning to believe that the trend is upwards as opposed to downwards. Either way, short term, the dollar is likely to strengthen further. We are also aware that our listeners and subscribers have heard all of the clarion calls from the usual suspects, that silver is going to $50 or $100 this year, so buy now. Well, let's not forget some of the headlines that were published in recent years. Quote, silver, $150 an ounce possible in coming months due to tiny size of physical market, unquote. Zero Hedge, 7th of December 2014. What happened in 2015? It fell from $15.97 to $13.82. Quote, the forces that will push silver over $100, unquote. Silverdoctors.com, 12th of March 2014. What happened in 2015? It fell from $15.97 to $13.82. Quote, silver, $100 within 2 years, unquote. Moneymorning.com.au, 27th of March 2013. What happened in 2015? It fell from $15.97 to $13.82. Quote, the silver bomb. It's an opportunity that will never happen again. $500 plus silver is coming, unquote. SGT report, 24th of June 2012. What happened in 2015? It fell from $15.97 to $13.82. And our favourite of all time, quote, here's why $100,000 an ounce silver is a conservative estimate, unquote. Roadtorouter.com, Big Swear, 17th of June 2014. What happened in 2015? You guessed it. It fell from $15.97 to $13.82. Our view, yes, silver prices will in time rise, and to appreciative levels. Yes, taking a 10+ year view, we believe $15 silver is cheap, but is likely to become cheaper later this year. But nevertheless, a couple of dollars make very little difference over such a time frame. However, short of our proverbial black swan appearing, do we see prices rising to $100 in 2016? No. $150 in 2017? No. $500 in 2019? No. How about $100,000 an ounce silver? Ah, yes. But long after we are all dead. Happy Easter to you all. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/IlluminatiSilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice and merely represent the personal feelings